Today, a quick market update. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. Before we start, a quick reminder that on Tuesday at 8 p.m. Sydney time, Chris Bates, mortgage broker, will be on and will be discussing what it's like to be in mortgage broker land at the moment with all the momentum that's there. So join the show, ask a question live via YouTube chat and mark your diaries for 8 p.m. Sydney on Tuesday. Well, we are definitely getting into heady waters now. The US stocks extended their recent rally on Friday, and the S&P 500 and the Nasdaq indices scored their biggest weekly percentage gains since the US elections in early November, boosted by optimism over earnings, stimulus talks, and progress on vaccine rollouts. Both the Dow Jones Industrial Average and the S&P 500 rose for a fifth straight session in their longest streak of gains since August last year, while the S&P 500 and Nasdaq posted record closing highs for a second day in a row. The smaller-than-expected rebound in the US labour market last month highlighted the need for more government aid to shore up the economy. The Labour Department on Friday reported a 49,000 increase in non-farm payrolls last month, but job losses in manufacturing and construction. And US President Joe Biden and his Democratic allies in Congress moved ahead with their $1.9 trillion COVID-19 relief package as lawmakers approved a budget plan that would allow them to muscle Biden's plan through in the coming weeks without Republican support. The upcoming package of stimulus is going to be big, said Alan Lance, president of Allen B. Lance and Associates, an investment advisory firm based in Toledo. You have a situation where there's a lot of cash on the sidelines and bonds have really underperformed, so that's helped some sectors that have done really poorly. Upbeat earnings this week have also supported investor optimism. So far, stronger than expected corporate results in the fourth quarter have driven up analysts' expectations, and the S&P 500 companies are on track to post earnings growth for the period instead of a decline as initially expected. The Dow Jones Industrial Average rose 92.3 points, or 0.3%, to 31,148, and the S&P 500 rose 0.39% to 3,886, and the Nasdaq Composite rose 0.57% to 13,856. For the week, the S&P 500 gained 4.65%. The Nasdaq gained 6.01%, and the Dow increased 3.89%. And the small cap Russell 2000 index rose 7.7% for the week. That's the biggest weekly percentage gain since the week of June the 5th last year. The Volatility Index had its biggest weekly point drop since the week ended November the 6th. And the S&P 500 Technology Index ended down 0.2% after hitting a record high earlier in the session. Interestingly, shares of GameStop Corp, caught in the recent social media hype trading frenzy, rose 19.2% on Friday after online broker Robinhood lifted all the buying curbs which had been imposed at the height of the battle between amateur investors and Wall Street hedge funds. And overall, advancing issues outnumbered declining ones on the New York Exchange by 2.33 to 1. On Nasdaq, a 1.94 to 1 ratio favoured advances. And in fact, the S&P 500 posted 34 new 52-week highs and no new lows. The Nasdaq recorded 286 new highs and 4 new lows. And volumes on US exchanges were 13.65 billion shares compared with the 15.5 billion average for the full session over the last 20 trading days. And if you look at the economy, you can say that there are grounds for concern, though, particularly after that Friday hiring report. But the picture in bonds, stocks, and commodities is fast becoming one of near unanimous optimism as investors brace for the benefits of vaccines and stimulus. It was there on Friday, with less than stellar employment data hitting, but actually trade was in full swing. Long-dated treasuries, the ultimate asset haven, sold off this week, pushing the yield curve to its steepest level since 2015. Break-even inflation rates climbed to an 8-year high, breathing life into financial and energy stocks, and crude oil hit the highest price in a year. The people who run companies are similarly enthusiastic. Sentiment among corporate managers is running at an all-time high this earnings season, according to a study of recent call transcripts by Bank of America. Meanwhile, analysts increased their 2021 forecast for the S&P 500 earnings by 3.6% to 170.3 a share in January, a rate of upward revisions that, except for the 2018 bump from tax cuts, was the fastest to start a year since at least 2013. Once calm returns and the path ahead becomes a bit more predictable, attention eventually returns to the fundamentals, said Jim Paulson, Chief Investment Strategist at the Lotho Group. Fortunately, investors will be reconnecting with earnings just as they are poised to be stellar. Now, interestingly, beneath the surface, cyclical stocks, those with earnings viewed as being more tied to economic swings, revived their leadership role over the week. Energy shares halted a 2-week slide, jumping 8.3% for the best performance in the S&P 500. The KBW Bank Index had its best week since November, while the Russell 2000 Index of small caps rallied the most since June. Boosting financials was another leg higher in long-dated Treasury yields, with the benchmark 10-year rate briefly touching 1.18%, with the Federal Reserve pinning short-term rates near zero, while rising inflation expectations lift the long end. The yield curve is forecast to steepen further, a boon for bank stocks, which have been hammered by a relatively flat US curve, assuming, of course, that inflation does come through, which, as you may know, I doubt. We have record amounts of stimulus and we have short-term rates at zero. We're starting to see the reflation trade being evidenced in the long-term part of the yield curve, said Tony Beglin, head of global markets at Citizens Bank. The sign of reflation is gaining some traction here, with just massive amounts of stimulus combined with a reopening of the economy. Now, I have to say, of course, that whilst that liquidity is there, unless it flows into the real economy, it may not translate into inflation. So we'll see down the track. Analyst 2021 profit forecast for S&P 500 companies is ticking up. More than halfway through the earnings season, 81% of S&P 500 companies that reported beat analyst estimates. That's a near record pace, according to recent data. Thanks to the solid performance, corporate America is returning to earnings growth earlier than expected after the pandemic-induced recession. And based on actual results and estimates for those that have yet to report, fourth quarter profits likely increased 3.6% compared with the decline of 9% that was forecast just a month ago. Now you have broadening earnings in place that haven't had much earnings growth over the past few years, and that's what I think investors will be attracted to in 2021, said Brett Schultz, Chief Investment Strategist at Northwestern Mutual Wealth Management Company. And over in Europe, stocks there edged higher on Friday, helped by strong earnings from the likes of BNP Paribas, as well as optimism that the worst of the pandemic is over, and hopes that Mario Draghi will be able to steady the ship in Italy, the EU's third largest economy. The DAX traded higher, as did the UK's FTSE. The Eurozone has been hit hard by the second wave of the COVID-19 pandemic, with the region's GDP falling by 0.7% in the final quarter of 2020, as governments introduced new restrictions and lockdowns to try to curb the virus. And more evidence of this slowdown emerged on Friday as German factory orders fell 1.9% in December, a sharp drop from the revised 2.7% gain the previous month. Growth in the first quarter of the new year is also likely to be negative, but there is hope ahead. The Bank of England, for example, while keeping its monetary policies unchanged on Thursday, said that the UK economy is heading for a rapid pickup thanks to a bold vaccination effort. Government projections put the country on course to vaccinate every adult by June. With COVID-19 cases now declining in certain regions, including the US and the UK, there will be a glimmer of hope that the worst is now behind us, particularly as the rolling out of vaccines picks up, said analysts at ING in a research note. And also helping the tone on Friday was the release of more solid earnings data. But we shouldn't get too far ahead of ourselves. As I said in some of my earlier presentations, there's still plenty of issues ahead. But the markets, of course, are trying to look ahead beyond the vaccine, beyond the virus, and into future growth. It's just that the amount of liquidity that's going to be poured in and its impact, I think, is yet not very certain. The ASX 200 closed up 1.11% at 6,840. The ASX 200 financials was up 1.85% to 5,871. The real estate trusts were up 0.93% at 1,411. And the Australian Volatility Index was down 0.26% to 1472. The ASX 200 futures was up 0.22% at 6778. And amongst the banks, ANZ was up 2.06% to 25.29. CBA was up 1.81% to 88.64. NAB was up 2.15% to 25.23. Westpac was up 2.03% to 22.15. And the Bank of Queensland was up 2.15% to 8.55, while Bendigo was up 1.53% to 9.93. And Suncorp was up 3.65% to 10.51. Macquarie Group was down 0.13% to 134.52, while AMP was up 2.94% to 157. Genworth was up 3.20 to 2.58, and McGrath was up 1.94% to 0.525, while Yellow Brick Road was down 2.22% to 8.88 cents. AFG was up 2.87% to 2.87, and Mortgage Choice was up 8.67% to 163, while Afterpay was up 3.41% to 151.30, despite the announcement this week that the UK regulators are going to treat buy now, pay later products as credit products. And in the building sector, CIMAC was up 2.78% to 25.92. The Aussie US dollar was up 1.04% to 76.78. And the Euro Aussie dollar was down 0.3% to 1.5682. The 2-year Aussie bond was down 10.83% to 0.107, while the 10-year Aussie was up 3.83% to 1.247. The Aussie Gold Cross was up 0.13% to 2,359, and the Bitcoin Aussie Cross was up 3.89% to 51,431. Gold futures were up 1.33% to 1,813. Silver was up 2.98% to 27.019. And copper was up 2.45% to 3.626. Crude oil futures were up 1.51% to 57.08. And the S&P 500 futures was up 0.52% to 3,880. The Nasdaq futures was up 0.42% to 13,598. And in crypto land, Ethereum was up 1.01% to 1,680, while Bitcoin was up 4.85% to 39,551 US dollars. You can see there that the markets are pretty buoyant at the moment. Expect more of that ahead, but I think we're also going to see more volatility because I do think there is more uncertainty than the markets are currently taking into account, but we'll see and report as things move forward. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.